Welcome to today's Explainer. We're breaking down the absolute crossroads Dogecoin is facing right now in May 2026. If you've been watching the charts lately, you know the pressure is seriously mounting, and the narratives are clashing like never before.
So, is it a meme, or is it a regulated digital commodity? That's the million-dollar question, right? It's the core tension driving the entire digital asset market today. As Dogecoin fights tooth and nail to graduate from being just an internet joke to an actual Wall Street staple. We are literally witnessing a fundamental identity crisis playing out in real time.
All right, here's our agenda for this explainer. First, the 2026 Dogecoin crossroads. Then, from meme to regulated commodity, whales and leveraged bets, the technical battleground, the expanding token ecosystem, and finally, the supply constraint reality. Let's get right into it.
Section 1. The 2026 Dogecoin crossroads. To understand where an asset is heading, we really have to look at where it's sitting right now. And honestly, the charts paint a pretty tense picture. With Bitcoin recently dipping below that 77,000 mark, Doge has been pushed right down to a critical support level at exactly 10 cents. This severe loss of momentum completely neutralized recent recovery attempts, and it's kind of positioned Doge as the worst performing asset in the top 10 over the last few days. It is a precarious spot, for sure, for the world's famous dog-themed asset.
Moving on to Section 2, from meme to regulated commodity.
But hey, underneath that immediate price weakness, the macro foundation is totally transforming. Just check out this timeline. In March 2026, we actually saw the SEC and CFTC jointly classify Dogecoin as a digital commodity. Then, in April, Elon Musk's X Money drops its public beta to roughly 600 million users. And now, in May, we hit the biggest catalyst of the whole year, the Crypto Clarity Act officially advancing through the U.S. Senate Banking Committee with a bipartisan vote.
So why is this legislative timeline such a huge deal? Well, this regulatory clarity means institutions that were totally sidelined by legal risks can finally jump in. By officially treating Dogecoin as a pure digital commodity, putting it right up there with Bitcoin and Ethereum, it completely removes that fear of it being an unregistered security. This is exactly what paved the way for the recent launch of the 21 shares NASDAQ ETF, which fundamentally expands who can actually buy this asset.
All right, Section 3. Whales and leveraged bets.
So how are the heavy hitters reacting to all these massive legislative catalysts? The answer is in this staggering number, $108.52 billion. That is the record-breaking amount of Dogecoin currently held by just 149 whale wallets. We're talking about massive accounts holding at least 100 million tokens each, representing over $11.6 billion in highly concentrated capital.
When you see the actual split, it is wild. Smart money has been aggressively accumulating, completely ignoring the recent price consolidation. We honestly haven't seen this kind of concentrated buying since the lead-up to previous historic bull runs. The largest holders are hoarding an unprecedented slice of the pie right now. But here's where it gets super interesting. An entirely new, totally anonymous wallet just opened a massive $2.25 million 10x leveraged long position. But because of that 10x leverage, this is a seriously high-stakes bet. If the price drops even slightly, just under 10% to 0.10284, they face total liquidation. They are literally balancing millions of dollars right on the edge of a cliff.
Which brings us perfectly to Section 4, the technical battleground.
That razor-thin margin sets the stage for a brutal fight on the daily charts. For the bulls to take control here, they absolutely have to hold that 10.5 cent line. And more importantly, they need to smash through the 0.1260 resistance. That specific level is the 200-day exponential moving average, a huge long-term indicator, and it has violently rejected Dogecoin 3 separate times this year. If they break it, targets open up toward 18 cents. But man, the bearish risks are severe. If they fail to hold 10 cents, we're looking at a rapid slide down to 9 cents, which would completely wipe out those heavy long positions we were just talking about.
Let's pivot to Section 5, the expanding token ecosystem. While that technical war is raging on, there's a whole ecosystem of peripheral projects feeding off the Dogecoin brand. And these rapidly expanding pre-sales are actually solving a huge problem by providing the active utility that Dogecoin natively lacks. You've got Deep Snitch AI acting like an on-chain analyst in your pocket to track the exact whale movements we discussed earlier. There's Meme Punch, an actual play-to-earn arena where the Doge character battles other memes, and Polytruth deploying AI to analyze the booming prediction markets, which is a sector also heavily benefiting from the new Clarity Act.
The concept of a circular economy is exactly why these secondary projects matter so much. By building systems where users earn rewards and then spend those rewards on competitive upgrades, projects like Meme Punch are basically tapping into Dogecoin's massive community to fuel a self-sustaining internal economy. It finally gives people a real reason to hold and spend beyond purely waiting for an Elon Musk post online.
And finally, Section 6, the supply constraint reality.
Okay, zooming back out to the fundamental reality of the original coin, we run into an unavoidable math problem. The crucial point is this number right here, 10,000. That is how many brand new Dogecoins are mined into existence every single minute of every single day.
To put that into perspective, 10,000 coins a minute equals roughly 5 billion new tokens flooding the market annually, and there is no hard cap. Now, back in 2013, this continuous issuance was designed intentionally to encourage spending rather than hoarding. But from an investment perspective, it creates a massive inflationary anchor. You need constant, overwhelming demand just to keep the price stable, let alone push it past that stubborn 12-cent resistance.
So, as you digest this explainer today, I want to leave you with this provocative thought. With Wall Street now officially entering the chat to the Clarity Act, whales hoarding billions, and massive leverage bets hanging in the balance, can all of this newfound regulatory clarity and ecosystem utility genuinely outpace an infinite inflationary supply? That is the ultimate question that will decide the fate of the world's most famous meme commodity. Thanks for learning with me today, and keep questioning the data.